Thank you for tuning in to another edition of the PulseWave Report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world's famous PulseWave Price Trigger Reports. All right, so here we are, another day, another dollar, right? Well, as you know, tomorrow is Take Back Friday. It has been a very wild ride, a very volatile week. A lot of things going on, a lot of things have happened. I've addressed it here on this channel. Today, there was a big old uproar. A lot of people weighed in. It was an all-day affair, mad coverage on all the, business channels, Fox Business, CNBC, Bloomberg, you name it. Everybody was weighing in, coming out of the woodworks. My man Tom Payne, though, on Fox Business, he kept it real. He kept it real. He's a triple OG. He goes back to the days of Reggie Middleton. They were like one of the only two black faces that you saw on any business channel, and they would come on and drop science and give it to everybody raw, live and direct. So I got mad respect for Thomas Payne on Fox Business and for Reggie Middleton. Those brothers, they know what they're talking about, and they have served their clients well. However, you do have those those sellouts that don't know what they're talking about, and they just basically puppeteer for the powers that be. They're not for the little guy. All right. And they know who they are. We're not going to have to mention none of those names. Okay, so here's what's going to happen. Here's how things are looking, because I know we got to deal with the elephant in the room. Why did several brokerages decide to restrict access to trading in the middle of the trading day? Why would they do that? Why did that happen? What was the need to do that? Well, I can only talk to you from past experience. I've been in these markets for decades. I did my Wall Street thing for a minute, worked at a few different firms, all that good stuff. My background, my history, designing, trading strategies, systems, you name it, for wealthy clients to extract money out of these markets. My resume. You've seen my videos. I got mad videos on YouTube here. I've been on YouTube for a decade now. All of my market calls are on here. Win, lose, draw. I've never taken down one market video ever. So you can take a look at those at your leisure. There's nothing hidden there. But I got to speak from experience. I used to run a trade desk, so I know what goes on the business side of things. And at the end of the day, it's really simple. If you really think about it, it's really simple. It's all about risk management. And, firms take on risk as well. They can't allow all of their clients to take unlimited risk, because then that puts risk to the firm. All right. If a person only has X amount of money in their account, you're not going to let them risk more than what they have in their account. All right. So that's when margin calls start coming in, things of that nature. So I can understand why certain outfits would restrict trade and say, you know what, we got to restrict access. It's not uncommon for Wall Street to suspend trading in stocks for whatever reason, pending announcement, whatever, you name it. Shares have been halted on the trading floor at the New York Stock Exchange, NASDAQ. It doesn't matter. Multiple reasons over the decades, many stocks. It's not uncommon to cease or halt trading in a stock. Not uncommon at all. What is uncommon, though, is where you restrict access when the market is not closed. It would have been different if, let's say, the New York Stock Exchange. So, you know, we're going to go ahead and suspend trading in GameStop for the day. That's enough. We're going to halt trading. We've got to halt trading. We're going to halt it. That's different because now the exchange has decided it's going to halt trading in those shares for whatever reason. But when a broker decides that they're going to restrict trading, that's a little bit different. That's a different scenario. We start to get into a little gray area here, a little sketchy area, and it's a little different. Now, it's not unprecedented. It is not unprecedented for brokerage houses to say, you know what, we need to restrict trading a little bit here, because again, they assume risk. All right, if you blow up your account and you go deficit, you know, the brokerage house still has to balance their books at the end of the day. All right, so they don't want to have to be, you know, eating that. So I can understand them, you know, taking some measures. It's not unprecedented. During 9/11, a lot of brokerage houses suspended trading in certain asset classes. I will never forget the day I came into work. The week after they reopened the markets, and we were told in no uncertain terms we could not trade the S&P futures, the Dow futures, the NASDAQ futures, the Russell futures, the KNIFE, which is the New York Stock Exchange, the NYSE. Couldn't trade that. Couldn't trade none of the forex currencies. Couldn't trade the euro. Couldn't trade nothing. If you was going to trade, you could probably trade some grains, trade soybeans or cotton. And even that was almost impossible to do because cotton was restricted for weeks after that. They only took, what was it? Was it orders to liquidate positions or something? It was something weird. You couldn't just get in there and say, oh, I'm going to buy some cotton today. No, sir, no, ma'am. I think they were only taking liquidations and that's it. And I remember cotton just kept sliding for like every day. It kept sliding for like weeks after 9/11. So it's not unprecedented for a brokerage to say, nah, you can't trade this particular thing today. We're going to go and restrict some trade or put some rules in here. I understand that, you know, because sometimes, you know, you got to protect yourself. So I get it. I ran the trade desk. I made those calls. I was the one that had to make those calls. Sir, this is a margin call. We need to know, how do you intend to rectify this situation? Well, you know, I can write you a check. No, you cannot write me a check. We need a bank wire ASAP. We need a wire. We need the money. We need liquidity now, or we are taking you out of the position at a loss. Sometimes we had to pull trades on people. You know, market them out. You're out of here, buddy. And you got to eat the loss, you know? So I get it. I get it. But wanting to pass rules and things like that, you know, it's a little bit too late for that. You already have a plethora of rules when it comes to stock trading. You don't need any more. What you need to do is deal with the exposure. I think this week was a watershed event. I think cheating on Wall Street has now been exposed this week. I think the real story is not that the Reddit users made money buying GameStop. The real story is all of these naked shorts that were 130, 40, 150% short the stock. That's the real story. The real gambler is these big hedge funds that took these massive short positions on GameStop. It was only a $20 stock. Why were you shorting a $20 stock? Well, you know, they're facing bankruptcy. Shut up. I don't want to hear it. You took unlimited risk. When you take a naked short position, ladies and gentlemen, that is what we call an unlimited risk trade, meaning that your risk of loss is unlimited because there is no limit to how high a stock can go. There is no laws on the books that say a stock can only trade this high or there to that level. A stock can go to infinity. There is no limit on how high a stock price can go. However, all stocks can only go to zero. A stock can only go to zero. If it goes to zero, that's it. Okay, so your downside risk is always limited. A share price can only go to zero. The most you can lose when you buy a stock is whatever you paid for the stock minus the commissions. That's it. That's your maximum loss, okay? But when you sell something short, naked short, unlimited loss potential. If you sell a call option right now, if you write a call, unlimited risk. Because you're betting that the price goes down and the price can go to infinity on you, and now you're done. It is an unlimited risk trade if you write a call and you do not already own the shares. That's a naked position. Naked positions have unlimited risk. A hedge fund should know better. I don't want to hear them complain when they blow up. You never blame the market, you blame yourself. You take responsibility for your trading. It's never the market's fault. I don't care what the scenario is. Trading 101, the market is always right. You never blame the market. It's not the market's fault, it's your fault. You assume responsibility. The reason why we venture into these waters is because of the unlimited gain potential. But with it comes unlimited loss potential if you do not approach it the right way. If you go in here and you take naked positions, well then yeah, you get what you get. You know you face unlimited loss potential on naked trades. Come on, man. You naked short and you don't own the shares and you have no other stop loss measures in? Are you kidding? You're taking an unlimited risk. The thing could open up tomorrow at $1 million a share. You don't know that. If it does, you're ruined. Come on now. These dudes were short GameStop at $20, and it went to over $500 today. $500. I saw a print for $510. And I'm looking here on the way that they're disseminating the information. It looks like they're extracting the extended hours. So they're putting the high today at GameStop at 483. All right. But it dropped from 483 to $112.25 today before settling at like 100 and something. And then in the extended hours, they jumped all the way back up to over 300. Mad volatility. People getting wiped out. People getting stopped out. Losing money. All right. It's the nature of the game. Learn to play it the right way and you'll be all right. Okay? You'll be all right. All right? So enough of that. I'm off of that now. I just had to say my piece in that department. All right? We don't need to talk about this no more. All right? It's a big boys market. It's a big boys game. Put up and shut up. No more crying over it. We don't cry over here. We don't pout over here. We don't do that. You don't blame the market. You blame yourself. Assume responsibility. All right, let's see here. See what we got. All right, let's go into our chart segment. Let me go ahead and share my screen with you. Give me 1 second. We're going to take a look at a few things this evening. Tomorrow's Take Back Friday. As you know, I normally do not initiate new positions on Friday. I just don't do it because it's Take Back Friday. Markets that have been up all week tend to be down on Friday due to profit taking and vice versa. If the market's been down all week, then they'll rally a little bit on Friday due to profit taking. But because these are perilous times and unprecedented times, who knows what can happen? Anything can happen. And we know this. So it is what it is. You take it upon yourself. You assume that, then you do what you do. I'm going to do what I do. I'm going to keep my powder dry and wait till Sunday night when the futures open. That's when I get to come out and play. I'll let y'all bang around tomorrow. But I'm definitely going to be having my fun over the weekend. When Sunday night come around, that's when I come out to play. Y'all know primarily I trade futures primarily because of the liquidity. I don't have to worry about extended hours and all that nonsense. I can do what I do and keep it pushing. All right, so first things first, we got a few things we're gonna look at today. I'm gonna try to keep this brief. We'll look at a couple of things. Let's start off first with let's look at the Russell My Hustle real quick. Let's pull up the Russell My Hustle. All right, so here's the Russell My Hustle right here. All right, and as you can see, here is the crash alert, and here's the downside production we've been getting on the short. The target is the trend line, which is below 2,000 right now. You need to understand that. Trend line's below 2,000, ladies and gentlemen. Trend line support. And I think that's where we're heading because here's your pointer right here. So, yeah, you want to short something? The futures look to be set up beautifully to do that. All right, how about the NASDAQ 100? Well, the NASDAQ 100 is a little bit different, man. It's not trying to play ball. All right, so we had all this upside potential. Here's your initial rally alert here, second one here, all this upside production from the rally alert, right? Then we had this crash alert, and we got no downside production today. Instead, we got a key reversal, basically, kind of, sort of. And now we have a rally alert for tonight into tomorrow's trading. So a little flip-floppage going on here in the tech sector. I think it's going to roll back over there. We may get a little bit of production, but I think this thing is about to roll. This is one of those times that you definitely need the pulse waves to know exactly what you should be doing and how to do it. Follow the instructions to a T. All right, here's your even the S&P 500. Same thing, except for it ended in the red zone while the NASDAQ ended in the blue zone. So here's your crash alert. Here's your downside production. And we got close to the trend line support target on the S&P. So it's respecting the 3,700 key support area. But should that fail to hold, the next stop is 3,600 even, which is the top of the Kumo cloud. And then the tertiary goal is 3,400, the bottom of the Kumo cloud. And if you fall out of 3,400, there is no more support for you. It's a free fall, falling off the cliff, and it will accelerate to the downside very fast, okay? You got to understand that coming into it, ladies and gentlemen. You got to know this. You got to know this. Hold on. There's one other thing, and I can't believe I almost forgot. Bear with me just for a second. I'm going to try to find something here. Let's see. Just got to find this. Can't believe I forgot it. Someone asked me about it earlier today. So let's see. All right. Here we go. Yep, this is it. No, hold on. I'm going to go to this one. Forget that one. All right, here's your Doji coin. I cannot believe, man. Look what they did to this Doji, man. Look at this. This thing shot right on up. And of course, you got a rally alert for tonight and tomorrow's trading for that one. But look at that, man. That is crazy. Market finally decided it wanted to try to do something, didn't it? Because remember, it's just been doing nothing, just sideways here, just not doing a whole lot. But see, if you were a PulseWave subscriber, you would have been in a position to capture that today. If you were watching the weekly triggers, you would have saw that. You could have got in on that one. That would have been nice. So now we got a rally alert for tonight into tomorrow's trading. This is looking crazy, ladies and gentlemen. This week has been a woodshed event for a lot of people, man. All right, let's take a look at Facebook. All right, so Facebook basically today's bar looks like it's reminiscent of 2000, back when the Fed would do those intermeeting, rate hikes and lowering rates, playing with the interest rates in between meetings. And you would have a bar like this on a day like that. And that's what happened here. They ran the highs and the lows and closed at the low. All right, so stop running today in the Facebook said snap, snap, took everybody out and then took you down. Now, today, coming into today, we had a crash alert coming into today anyway, and it gave you downside production into the close. I think you're going to fall even further because you got this gap right here that you need to contend with. So, yeah, man, can't make this stuff up. I told you, you don't play with the pulse waves, man. We let you know what's good before it happens. You can't make this stuff up, man. Can't make this stuff up. Here's Hack. All right, so now Hack appears to be topping out. Got a crash alert for tomorrow's trading. Trend line support down here around the 56 handle is the initial target that we're looking for on this one. So perhaps things are going to start to simmer down a little bit. Funny that on a day like today, with everything that happened today, Hack pulls back and gives us a crash alert. So does that mean this is the end of the market manipulation? Are they going to leave the market alone and just let the market be? Is that what this means? All right, let's see. What about Tesla? What's Tesla talking about? All right, so we came into today with a crash alert in Tesla, ladies and gentlemen. And here's what we got. Downside production. Trend line support around the 700-ish level is the initial target for this move. You do have a gap right there that you need to contend with. So we'll see if it makes its mind up and if it wants to do something about it or not. We'll see. But then you got the major gap way down here at the 3 to 400 handle. All right, so we'll see what happens on that Tesla, man. We'll see. All right. And now let's look at the man of the hour, GameStop. Here's your GameStop. Ladies and gentlemen, this is crazy insane. Let's see if we can break this down. Okay, so our initial rally alert was back here. If you were a subscriber, you would have saw it. You would have got long. You would have been into the trade already on the 13th, right? Then the next long came on the 19th, right? You would have been triggered into that trade on the 22nd. You'd have woke up the next day saying, woo, 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 because the market just went bananas on you. Then the next day, settling down kind of crazy like. And then the next day after that, the market went absolutely nuts. And you woke up and you were like, oh my goodness, I hit the lottery. I'm rich. But then a day like today just ruined hopes and dreams. Because look at today. I want you to look at this bar, this hyperparabolic bar. You hit a high of 483 and a low of 112. That means and the market opened at 265. So the market opens at 265. Rallies up to 483. Crashes down to 112 and a quarter and closes at 193.60. Talk about insane volatility. And then in the extended hours, rallies from the 193.60 close to over 330. Yeah, this is a widowmaker bar right here. Just absolutely insane. But even when this bar hit the bounce from the low point, those who were long from 20 and still holding on for the ride, you're playing with the house's money. Even if you got out at 112, you rolled a stock from 20 to 112. I think that's good trading right there. So even if you're now flat and you've taken profit and you're out of this market, you're good to go. Where this thing opens up tomorrow, who knows? But a round of applause to all the PulseWavers who caught and rode this and made a nice, decent profit. That's what the PulseWave price trigger reports are about, folks. They give you the buy signals before the market moves so that you can be in position to do something about it. All right, what about gold and silver? Well, here's what gold and silver look alike. So here's your silver chart. I'm sorry, it's gold. Here's your rally alert. Here's your upside production. Now you're just moving sideways, suspended in mid-air. You're just floating on air. The market's not going up or down. It's just floating. Look at the bars. From this bar on, you're respecting the trading range. Every day you're trading inside of this bar right here. You're trading inside of January the 20th bar, and you have not broken out from it. Every bar, every day, you're still respecting. You're going absolutely nowhere. Sooner or later, something's going to give. Is it going to break out or is it going to break down? I don't know, but something's got to give at some point. I don't know, ladies and gentlemen. This could be interesting. We got this. We got some bearish activity though, trying to creep in. Are the bears trying to take her down? I don't know. I don't know. It's going to be interesting to see though. That's for sure. And then how about silver? Is silver any better? Well, let's take a look. Silver did have a rally today, and that's for sure. Here's our rally alert here, and then here's the upside production. All right. It gave it up today in a big way, breaking 27. All right. You went up to 27.10. All right. Before pulling back to 26.60. If this continues, who knows? I don't know. How high can it go? I don't know. All right, but overall, you're still in a range. You're still in this bar. You haven't really moved from December the 21st of 2020. You're still respecting this initial trading range right here. Oh, you're still moving it. You're still in it. You're still in the range. You haven't done a thing. All right, you got to keep all that into perspective. And last but not least, what about the mighty Bitcoin Futures Composite Index? What did it look like? All right, so you still got gappage down here that you still haven't back and filled yet. It's not too late. As you can see here, the market is coming down. It didn't get too far away from the gap. It's starting to come down now. You want to see this. You want to see the market fill this gap and then rally. Because right now it's doing okay. All right, that first zone between 35,000 and 30,000 is really just respecting that right now. But it won't be too bad if we just come down here and fill it and then roll out. As long as that 22,000 to 20,000 key support zone stands, you should be okay. All right, so right now this market is doing okay. The bull is showing that it's maintaining a healthy amount of energy, and that's what you want to see. All right, so tomorrow, we're going to be having our webinar. You don't want to miss it. You want to go to PulseWave Trading so that you can register and sign up for that. You don't want to miss it. It's going to be our first Q&A of the year. You'll be able to come and ask me questions directly about the system, the strategy, what we do, how we do it, well, anything you want. All right, Q&A. And if you're in the live right now, go ahead and smash that like button for me. Antonio, I see you. ZRX. Is that a stock or is that a crypto? I know I sound like I don't know because I don't know. I don't know. What is that? Oh, you mean the crypto. I just put it together. You mean the crypto. All right. ZRX. Let me see what's up, man. Let me see what's up. All right. Let me see what's up. See what I can do for you. All right. ZRX. Here you go. Okay, so here's the initial rally alert here on this January 26, 2021. Here's your upside production. All right, and right now the bulls have it. The bulls are in control of this particular market right now, just like the bulls are in control of silver for right now. Looks like this one wants to head higher. Looks like it's trying to break out. All right, so this one's looking good, man. This is looking good. Do I track OMG? Let me see. Do I track OMG? That does ring a bell. Let me see. You know what? I used to back in the day. At one point I did. But no, we don't track it anymore. I track ADA. I track Bitcoin Cash, BNB, BTC, BTG, Dash, DGB, DIVI, DOGE, EOS, Ethereum, KCS, Lend, Link, LTC, Neo, Quantum, Theta, VET, Waves, XEM, XRP, XTZ, ZEC, and ZRX. That's what I'm tracking. That's what's in the system right now. At some point, I will add some more, but not right at this time. I go through a lot. It takes me a lot to add a crypto because I have to, make it run through my system, and that takes a little bit of doing. So we'll see. At some point, I will add more, but for right now, that's what I'm working with. I'm not really messing with nothing else right now. Not at this time. But at some point in the future, you never know. You never know. You just never know, So we'll see. I don't know. Don't quote me on it. I'll work on it. I'll see what I can do. But for now, I don't have any plans of adding anything in the near future. Not in the near future. All right. All right, ladies and gentlemen, you know what it is, man. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button, please. All right, it lets me know that you guys care and that you're getting something out of these and that I'm not just wasting my time. Lets me know that y'all love me. You love me. You want me to keep doing this. Because for me, it's a labor of love, Marty Marr loved kids. Remember that? So I do it, man, to help as many people as possible. That's why I do this. I'm really trying to help as many people as possible. So that everyone can have a livelihood, man, an income stream that, some people wish that you didn't have. They're trying to take it away from you. So I'm just trying to do what I do. Yeah, I do cover Link, man. I do cover Link. Link is one of the ones that is on the list as well. Some of the charts, though, are kind of funky, and I have not had the time to really work on a lot of them. But yeah, Link is in here. Link has a rally alert for tonight into tomorrow's trading, as a matter of fact. All right, Link has a rally alert for tonight into tomorrow's trading. All right, here's the rally alert right here. All right, so there you have it. This one's been flip-flopping around, so it's now switched back over to the bulls. So we'll see what happens for tonight into tomorrow's trading on that one. All right, you guys, I'm out of here, man. I'll see you guys tomorrow at the webinar. I see my brother finally made it. What up, man? I appreciate the support, my man. I appreciate it. All right. As far as the TD Ameritrade, Kyle, you probably missed it. I talked about it in the beginning. I explained it. But basically, I was explaining that I know when I ran the trade desk back in the day, it is about mitigating risk. You have to control your risk. And if you have a lot of people naked shorting and they're you got a lot of people on margin call and you have all this risk that you're taking on, the firm is liable. You know what I'm saying? At the end of the day, the firm has to balance their books. All right. And what we had was we had a brokerage account that was our free fund account, if you will. That's where errors would go, and you kept cash in there for situations like that. So that if you got a bunch of people that are deficit, it's your job to hurry up and do the margin calls and get people to make good on their accounts. So I used to have to make those calls, and it wasn't always a pleasant experience. So I understand, restricting. It's not unprecedented. Is what I'm saying. It's not unprecedented. All right. The week after 9/11, when the markets reopened, there was a lot of restrictions. Restrictions can come one of two ways. They can come at the exchange level, like the New York Stock Exchange says, we have to halt trading in XYZ stock for whatever reason. And it can also come at the broker level when your broker says, no, we're not, we're going to curb activity in this particular market for whatever reason. Brokers do have the right to do that. They also have the right to raise margins. On the future sides of things, they have what is called span margin. That's when you're doing a trade that is a little bit more sophisticated, and they have to calculate your risk of ruin and what the risk is to the firm. Equities don't have span margin. It's just point blank. This is how much it costs you to put a trade on. If you don't have the money in your account, then so be it. But whenever you're taking on naked positions, naked shorts, all right, naked positions, meaning that you don't own the shares. You're selling call options on stocks you do not own, okay? Or you're shorting, you're borrowing shares that you don't own to short. Anytime you are naked shorting in the market, you take on what is called unlimited risk, all right? Because the security can go to infinity. There is no rule or law saying, okay, prices can only go but so high. No, there is no rule. There is no law. There's no rule that says that a stock can't go to $1 million a share. There's no rule that says that soybeans can't trade at $500 a bushel. Okay. Yeah, it sounds really insane, but you can't say that it can't happen. You don't know what can happen. That's why when you take on unlimited risk, I mean, I understand you're doing it because at the same time that you take on unlimited risk, it gives you the potential for unlimited reward. Sometimes depends on the situation. Majority of the time when you are naked shorting, though, you have unlimited risk with limited reward. The risk to reward ratio is way off because when you're shorting, the most that a stock can fall is zero. Okay, so I can only make to zero. But when you buy a stock, you have unlimited profit potential because a stock can go to $1 million a share. You can buy a stock for a penny and it goes to $1 million. All right. There's no rule or law saying that can't happen. So you have unlimited profit potential when you buy a share of stock. But when you short a share of stock, you have limited profit potential because the stock can only go to zero. And you stop making money once it hits zero. See what I'm saying? So that's why TD Ameritrade, Interactive Brokers, Fidelity, Robinhood, that's why these firms decided that they were going to step in and protect themselves. They weren't protecting you, they were protecting themselves. All right, let's not get that twisted. When they say we're restricting trading in a particular asset, it's for them, not for you. Forex brokers do it all the time. They say we're raising margins on the euro dollar because of whatever's happening in the world. So it's not unprecedented to restrict trading in assets where risk is going to be crazy. Futures don't have to do that. They don't have to say we're restricting trading. All they do is jack the margins way up, your initial margin. So if your initial margin to buy one E-mini S&P 500 futures contract, let's say it's $3,000 a contract normally, but because of whatever's happening in the world, they can say, you know what, it's no longer $3,000 today, it's $30,000. They will hold the right to do that. The COMEX does it all the time with gold and silver. When gold and silver is really hot, those margins go through the roof. You could be looking at a $30,000 or $40,000 margin just for one contract. I'm not kidding. I've seen them do it. I've seen them raise the silver margin 4 times in one day. I'm not kidding. 4 times in one day. Equities don't have that. If you go back and listen to my pre-market PulseWave report that I did today, I went into length at how that works and what might be coming down the line. So if you missed my early report today, then you probably want to peep that. All right, I'm out here, guys. It's getting late. I got to go. I'll see you guys tomorrow morning for the webinar that we're going to do. Go to pulsewavetrading.com and you can register for that. All right, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I hope everyone has a wonderful weekend and all that good stuff. Be safe. And I'll see everybody back here on Monday. Everyone else, I'll see you guys in the trading room. And I'm out. Peace.